In other related news, the Saudis are planning a $40 billion AI fund, according to the New York Times. Reps from the Public Investment Fund in Saudi have spoken to a number of firms about partnering on it. This would be the second largest venture fund of all time behind SoftBank's $100 billion Vision Fund 1, which you remember was also backed by the Saudis and some other folks in the Middle East region. This new fund would reportedly invest in AI startups, chip companies, and data centers. So we thought we'd do a little quiz here. If you were given the $40 billion, David Sachs, how would you allocate the $40 billion in AI in today's market, 2024 going on? If they put you in charge of this $40 billion AI fund, where would you deploy it? Same question would come around the horn to you, Freeberg, and then you, Chamath.
Well, the first thing is I wouldn't be in a rush to deploy all 40 billion at once, because that's a recipe for spraying a lot of money into unproductive or overhyped things. So I would take my time, first of all. But second, in terms of coming up with a framework, I would think about the different levels of the stack of AI and try to figure out where the value capture is going to be. And I think there's maybe 4 different layers of the stack. First, you've got the silicon, you've got the chips where NVIDIA is dominant. Then you've got the foundation models where it's OpenAI, and then there's some open source models. And then you've got kind of infrastructure, dev tools, vector databases, things like that. And then finally, you have the applications sitting on top of that, which are just getting started. I think it's really hard to know from what we're seeing today exactly who's going to capture the most value in the stack. I mean, you could make an argument for or against pretty much any layer of the stack. I guess if I had 40 billion to deploy, what I would do is try to identify who are the leading companies at each level of the stack, and then who are the most promising challengers. And I would make a bet at every layer so I'm covered. That's not what I personally do, because I'm just not a hardware investor. I'm not really an infrastructure investor. I'm more of an application investor. So I'm going to focus on that 4th layer of the stack and just trust that there's going to be enough value there. But again, if I was managing a $40 billion sovereign wealth fund, then I would play at every single level. And I would hire the best people who know each layer of that stack.
Sachs, I think you did a good job of sort of showing the 4 layers of the stack. I think open source, the application layer, and specifically robotics are huge opportunities that are underinvested in right now. So I would take the top open source projects. I'd find those top contributors, take the top 20 or so open source projects and back them to the tune of, significant money, 50 million, 100 million, whatever it takes, and try to own the top 20 or have insights into those top 20 open source models and own those teams. Look for the top contributors, really easy to do on GitHub and Hugging Face and Replit and other places where they're active, and empower those. Then obviously there's verticals. We're working on people who are doing screenplays and tax, just like you are, Sachs, and that's a fantastic place to deploy money. But then I think robotics is going to be super, super compelling here. And that takes a lot of money. And so you do have the capital as a weapon and, the 20-year view of this, and making a general purpose robot like Elon's doing with Optimus, or Figure AI's doing with their robot. I think robotics is a major place. You could probably buy, I don't know who owns Boston Dynamics now. I know Google sold it. So you could probably buy some robotic companies and then put the AI on them and really take a 20-year view of robotics. Freeberg, your thoughts? How would you deploy the 40 million?
The bottom 3 stacks are very difficult right now to find a footing. Obviously, I think Sachs, it's I think the generally accepted framework for how to think about how the market is broken apart. But on the application side, I think is where you could think about finding more traditional business model advantages. So, I think your point about robotics is a really interesting one. Is there a enterprise-like sale of robotics tools that have positive ROI for enterprises? And is there a business that's working there and that is scalable? Vertical solutions in labor and automation and productivity gains are probably the best Sharpe ratio. Good alpha, lower beta, and a good place to kind of deploy. Competing in chips, competing in infrastructure, competing in models. It's such a, as we just talked about with respect to what happened with Inflection and Microsoft this week, it's such a rapidly changing environment. It's hard to have high confidence in where things are headed there. So I do think that we do know that there are enterprise markets. We know that there are segments of things like food, medicine, manufacturing. These are markets that aren't going anywhere. And they could all certainly benefit from unlocks in software or in robotics and automation and hardware. So that's probably where I would think about concentrating capital. But 40 billion is a lot of money. So you'd probably think about deploying it over what period of time? Is it 10 billion a year over 4 years? And then is it broken apart in what way over those sectors and over what geographies? And then find good managers to help you get it deployed.
Chamath, you're batting cleanup here. You got to hear everybody's answers before giving your own. What are your thoughts on your other besties' answers, and what's your plan to deploy 40 billion for the Kingdom of Saudi Arabia's public investment fund?
The most important thing that fund managers get wrong is not having appropriate reserves for your winners. And if I look back, the real profit dollars that I leaked was not investing enough upfront, but when I didn't have enough reserve to do the full pro rata or even super pro rata in the ones that worked. So the first thing you have to do, and when I do the regression on all of my funds, you really need to reserve between 40 and 50% of a total fund size for reserves. So take 20 billion off the table. And now you have a smaller problem, which is how do you deploy 20 billion? Because the other 20 billion is purely meant for the winners, where you cram the money into the few that are winning so that you can make the most money. Of that 20 billion, I would probably take 2/3 of it. And I would go to all the hyperscalers and anybody that's providing cloud compute and essentially buy out all of the compute credits on GPUs so that I could tell any startup in the world, you will do a safe with me, the Kingdom of Saudi Arabia. I will give you free compute on pick your cloud provider, pick your model. I don't care. So if you want to run Llama on Grok, great. If you want to run Mistral on GCP, great. If you want to run OpenAI on OpenAI, fantastic. But we will pay for all the compute. In return, we get 7% upfront. And you have to tell us some benchmark of how this model is improving. And then you are hiring a team of people whose job it is, and you can probably train a model to do this as well, to ingest the reporting in a systematic way to understand if it is, as you guys said, a robotics company. There are measures of the quality of a robot's dexterity or vision or manipulation or task completion rate. If it's a search engine, it's a different thing. If it's a consumer-facing app, it could be users. If it's a drug discovery app, it's the number of legitimate protein synthesis passes that pass. Whatever it is. So now you've scoped the problem to 20 billion is in reserves, 15 billion of it is tied up in credits. And then the 5 billion, I do think it's what David said, what Sachs said, which is $1.5 billion to the hardware, $1.5 billion to infrastructure, $1.5 billion to some of these discrete ideas. You probably need a 30 or 40 person team total, no more. But that business could make $1 trillion if it was set up that way. But the key is to get the credits out to people so that the reality is what the commonality across every single AI startup is that they will have to run on a model, and that model will be hosted somewhere in a cloud, and all of that compute will need to be paid for. So Saudi Arabia should pay for that compute, get 6 or 7% upfront, and retitle the safe not as what is the safe called, Jason?
Simple agreement for future equity.
This should be the Saudi
agreement for future equity. I love it.
That's what they should do.
Well, there you have it, MBS. The all-in KSA $40 billion fund. Give us a call. We'll fire it up and we'll deploy the $40 billion for you. I kid. Maybe.
Actually, I'm curious, you guys, since everyone kind of seems to agree with the framework of the 4 levels of the stack, where do you guys think the value capture is going to be? Do you think it's going to be by the chip companies, the foundation model companies, the infrastructure companies, or the applications?
I'll actually change my answer in a little bit. I don't think it's necessarily new technology companies per se that are going to benefit most, but I think that it's businesses in traditional industries that are going to be able to leverage these tools, whether they're using open source tools or third-party technology capabilities that they're buying as a service or as a piece of software. There's an incredible set of advances that are going to be realized in things like chemical manufacturing, drugs, general manufacturing that have existing scale and infrastructure that are the fastest to move to adopt these technologies are going to benefit the most. And I think that's probably where most of the value will accrue, is not necessarily a chip company, but in other businesses, in traditional industries that can transform themselves using AI.
So your answer is at the application
level, yeah.
And then within application level, you could divide it up between existing companies and startups.
Yeah.
And existing companies that are able to leverage AI innovations that are lower in the stack.
Another way to answer your question, Sachs, is which spaces are the most crowded already? And so obviously chips are super crowded, lots of incumbents, lots of people going after it. And the foundation models are very crowded as well. And the application level is yet to sort of be built out, right? Because we're in year 0 or year 1 of that. So I do think application level is where there's a lot of value. But I also think the hosting and the development of these various niche models is going to be a huge opportunity. So just once again, those open source models being put into cloud computing environments and optimized, that could be a whole new level of AWS's and Google Cloud and Azure's. So there's an opportunity for somebody to compete with those incumbents by just being better at those models that are open source and having the team that's doing those updates and then optimizing that cloud. So I would go with the cloud level for those open source models and providing that as a service like VMware does or other folks do. WordPress would be a tiny example of an open source project like that. And then something tells me this robotics space, which has been a false start over and over and over again, I think this is the time where actually it's going to work. And so I love that hardware robotics space for AI.
I think you're right, Sachs. I think it's kind of bookended in my mind. I think the folks that are building fundamental hardware will make a lot of money over the next 5 to 10 years. And then the folks that are building the fundamental application level experiences will make a lot of money as well. And then who knows? The thing that we're not talking about enough, and I don't understand it well enough, is the entire way in which apps are built needs to fundamentally be rethought from first principles, because you essentially basically have these client server apps where you have all of this business logic that's sitting back in some server somewhere. And I don't think that that's how apps get built today in a world of AI. And so it doesn't need to work that way. So I don't exactly know what that means, but it just seems like most of the architecture of how the internet works today doesn't make much sense. So that would then support Freeberg's point that all of the kind of the legacy things that we all know and trust also get rebuilt. And so that could create an entire wave where networking value gets recreated and everything. So my gosh, I mean, it could be very, very transformational.
Yeah, I mean, the idea that you would just talk to a computer or in a chat interface and you wouldn't use an app interface. You would just ask it questions, it would give you answers. Ask it questions, it gives you answers. Give it a task, it gives you a result.
This is
pretty compelling. Yeah.
This is why like Saudi needs to basically make a bet that there's just developers that are swarming around ideas. Let them show you what's happening, because paying $800 million a year of fees is not the best way to generate a return on $40 billion if this is where you want to be investing, I don't think.
Yeah.
$800 million could pay for a lot of credits, which probably gets you one step closer to the answer.